The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. This is episode 20. Alex Pang here alongside my co-host Alex Shanks. Alex, can you believe it's been 20 episodes since we started?
That's insane. And I mean, I was actually going through my camera roll the other day. I found the photo that we took the first episode we did. And I'm like, holy smokes, that was a while ago. It honestly doesn't feel like it was that long ago though.
Yeah, I guess we live in an age where, as fellow parents, we live day by day.
Yep.
And I guess for us on our schedule for the pod, we really go week by week, and news comes out fast and furious for us. So we, on the back end, when we're trying to put together our content to see we have enough for an episode. It's almost like we just keep going and going. And, all of a sudden 20 episodes in, it's been 5 months.
Yeah, it's crazy and loving it and excited to keep doing it here with you, man.
Absolutely. Absolutely. So we have a jam-packed show. Let's get right into it. So the big six banks updated their forecast for the overnight lending rate. So that's basically the rate that determines prime, which determines variable rates for mortgage holders, and the 5-year bond. The 5-year bond is what governs fixed rates. So Alex, do you want to go through it?
Yeah, totally. And I mean, I honestly was talking to some other people last night. The news just does such a bad job. Everyone hears that, hey, the prime rate's going to be coming down over the next year or two, which they then think fixed rate mortgages are going to keep coming down. Again, we have to remember that fixed rates are based on the bond yields. Variable rates are based on the Bank of Canada and the prime rate. And what we've actually seen is some banks have actually reduced their prime discount. When you get a variable rate mortgage, they give you a prime minus something usually. And they've actually they've tightened that up a little bit. And that leads us again that our rate's going to keep coming down. And that's where when we go over this, for anyone that can't see, we have a graph here. And what we're looking at is the current policy rate for the Bank of Canada is 3.25. Now, they're talking about what do they expect it to be Q1 2025, as well as what's it going to go into Q4. We're kind of missing Q2 and Q3, but they're looking at 2025 and 2026. And really the range is each bank is either saying it's going to drop by 0.25 or 0.5% in Q1. And that's I think that's the same vibe that you and I have, Alex. That's kind of what else is on the market there right now. We're not going to see these big discounts that we saw late last year.
Yeah, I think, keeping an eye on the market and economists, what we're kind of expecting is, we don't have we don't have a crystal ball, but it'll be quarter point cut, pause, quarter point cut, pause kind of thing. I believe the announcement schedule, we have 8 announcements in a year. So, the trajectory is about 0.75 to 1% more in cuts. So that kind of falls in line. The 3 or 4 cuts sandwiched in between those rate announcements is how we'll see it throughout the year. Yeah.
And that's where, I mean, the thing on this is you have one bank that says, hey, we're only going to see 1 rate cut all year. Then you have other banks that are going to have that 0.5% and then dropping again in 2020 at the end of it, and they're 0.75. So you got to have a variance from 0.25% to 1.5%.
Yeah. So, I mean, amongst the big 6 banks, I'd like to fall kind of in the middle. So I was, when telling my clients, around 0.75 to 1%. That's kind of quite the range. So,
and that's where, again, we can go back to when this was done during COVID, when we were talking about rates, are they going to increase? The banks did the exact same thing. We know that did not happen. We blew past the rates that we expected rates to go to. And so everyone has to remember is these are just rate expectations. And it can change on a daily basis. Luckily, we got some more news on other stuff. So, hey, looks like rates could keep coming down. Hey, next week, if something changes, well, rates could go back up. And that's where it's an ever-changing thing.
Yeah, oftentimes the Bank of Canada and the Fed, they rely on several reports. mainly the inflation report, GDP, and the job numbers. Usually, every month or every other month, there's those are
Yep.
the three main reports that they're looking for, amongst the other things, determine the sentiment in the market and all that stuff, whether it's a rate cut and or rate hold, or in previous years rate hikes.
Yep.
So that's what the Bank of Canada and the Fed are relying on.
I like on this two banks for their policy rate in Q4 of 2026. They've just said we don't even want to choose, and that is because it's so far out. I mean, it's kind of like the weather. Hey, I think in a year that it's going to be sunny out. It's anyone's guess, and that's where it's probably smarter to actually do that, to say, hey, I think it's going to look like this over the next year. I'm going to reassess for 2026.
Yeah, I mean, we've said before, prediction is a crap business, and even projecting out for the rest of the year is, I mean, we're pretty confident in the first 6 months of the year, like 6 months out. Anything more is, it gets kind of muddy, and then like don't even bother with 2026. It's kind of like a lot can happen
Yeah.
between now and then. And I mean, we all are aware of the political landscape in Canada and the US. I mean, by the time you guys listen to it, Trump has already inaugurated. He's in power now, and we'll talk about this, about the tariffs are coming in. Is it coming in? Is it not? Was it a all scare tactic? But yeah. So as we move on here, I mean, the last couple of weeks we've seen bond yields up about 1/4%, driven by the U.S. inflation fears and such. So the last week or so, we've already seen fixed rates go up in the 3 to 5 year terms.
Yeah.
So here's a classic example of, just because the Bank of Canada, the prime rate goes down, doesn't mean the fixed rates go down. Bond yields could act in an opposite direction depending on, especially the bond yield. The bond market is a more real time traded thing. Things can move a lot quicker in the bond market than it is with the Fed and the Bank of Canada and such. So yeah, we've already seen a 1/4 point hike in the 3 to 5 year fixed range. I mean, there's a small decrease in inflation in the US. Lenders have been increasing the rates the last couple of weeks, only
But
with
that's
the 3 to 5
yeah,
year.
that's where if we look at Q4 of 2025 for these, every lender is down other than one. There is one bank, Scotiabank, that actually expects that bonds will be higher, which would put more pressure on the fixed rates. And that's kind of coming from a couple different things. It's coming for the fears in the US. Hey, what's going to happen with our economy? So people are jumping into a stable market that way. The other thing is the Bank of Canada is still, we're doing quantitative tightening and easing, and they actually have money in the market that they put in there 2 years ago that they have to strip out. And that's not going to get back into the market, which is going to push bond yields higher as well.
Yeah, I was like, there's a new term that we've learned over the years: quantitative tightening, quantitative easing. Easing. Alex, do you want to explain to the everyday layperson what's the difference between quantitative easing and quantitative tightening?
Well, one is trying to restrict the market liquidity. They want to get funds out of it. And that's what they had to do when inflation was running rampant. They wanted money out of the market so people didn't have free range of money to spend. But at the same time, when stuff in the markets, like the economy's not doing good, they need to force money out into the market so business and people want to go and spend money. And so it is a game that they're playing. And this is where the bank can, they get to print money. Like they're specifically printing money to add money into the market, but they know that they have to strip some of that money out at some point.
Okay, so if I'm 5 years old and you want to explain to me, does quantitative tightening means rates are going up?
I didn't have time to look this up.
Yeah, so I mean, I guess with quantitative tightening means it's making it harder for the money to flow. So in a sense, interest rates are higher under quantitative tightening, and with easing, it means they want to be less restrict, want to have more money in the market.
Yep.
Ergo, interest rates are lower, which encourages borrowing and such, right? So
Exactly. Yeah. Quantitative tightening is reducing the liquidity out there. So that's them pulling the money out, and then quantitative easing, making it easier. They're then sending the money back out there.
Okay, there you go. Here's Finance Economics 101 with Alex and Alex.
Yeah. Then when we get into, we have talking about what's going to happen on the Bank of Canada side, is this is a funny one. We actually have one lender that says rates are going down. And then in 2026, they actually say that the Bank of Canada is going to increase the overnight lending rate. So again, that's where we just have to take this all with a grain of salt. But that's where it's looking at your options of, hey, does variable make the most sense right now? Because could rates drop on the variable side? And could you benefit from that? Hey, fixed rate, you may get a fixed rate right now, but what if they drop in a year? That's where it's not black and white. There is no perfect mortgage product out there, because if there was, everyone would be at that mortgage product. There wouldn't be all these different lending options out there. It's different for each scenario.
Yeah. Yeah. Obviously, every person has their own life situation, plans, what they plan to do. I'm just going to beat a dead horse. The strategy for everyone, or most people, is what we're advising is go variable right now, catch the wave down as interest rates are trending down this year. Right around 6 months before the Bank of Canada and the Fed are done cutting is when the bond market will be at its lowest. And then if you want to lock into fixed, that would be your time. Now, I'm sure Alex and I will do it, is with all our clients, we'll probably scream with a megaphone on the top of the hill. This is kind of the sweet spot where if you're going to lock in, this is the time to do it. So we're going to be contacting all our clients. We're going to be yelling it from the tops on the pod, but that's kind of the strategy going forward.
Yeah.
You can stay variable, but at the same time, if you are more kind of, trying to play the system and trying to set it up, locking into fixed at probably around late summer, early fall would be your best bet. Now, these forecasts are based on what we feel are today. It could change 3 months from now. So we'll update you guys as industry changes, strategy changes and such.
Yeah. And the big one where I've been helping a lot of people right now is helping them actually break their mortgage. They got fixed rates at 5.5%, 6% right now, because where fixed rates are, they haven't dropped all that much, but that is on their posted rates. The way that the banking system is set up, it is to make it very confusing for people so that they don't understand how banks make money. That's what Alex and Alex are here for. We're here to help you guys. And right now, majority of banks, you're still only paying a 3 months interest on breaking your fixed rate mortgage. There's certain lenders out there that you can actually break your mortgage and get the penalty replaced. I was able to help a client last week. We just closed everything. They saved $45,000 over the next 3 years in interest. It was a bigger mortgage and everything, but that is like a significant savings. Hey, even if we could save someone $3,000, that is like a major savings. And that's where a bank is never going to call you and say, hey, Alex, I know your mortgage is at RBC, but guess what? Scotia is actually offering you a better rate. You can pay your penalty and you could save money. The bank is never going to do that. And that's where people have to understand that's what we're here for. Alex and myself, we may not always have the lowest rate. Back in the day, mortgage brokers, we had the best rates. They were the lowest rates. It is the other stuff that we can provide to people. That is where we save people tens of thousands of dollars.
Yeah. So it's not always about the lowest rate. It's about the lowest cost at the end of the day.
Exactly.
So just to piggyback on what Alex is saying, the last probably 2 or 3 months that I've been working on a lot of clients is breaking those high fixed rate mortgages. And several I've saved clients anywhere from $3,000 to $5,000 in interest over the life of the term. And it's made a difference. It's freed up cash flow, and it's given people hope that most of the time, the people who've taken out mortgages in the last couple of years, they had to close on a pre-sale or pre-construction. They had no choice. They couldn't assign it because no one was buying. So they had to close. We were advising people to take a short-term 2 or 3 year fixed, essentially kick the can down the road, because we all recognized that rates were high at the time. So, but we knew it wasn't going to be high forever. Let's just get to the other side. In a couple of years, we can refinance, renew at lower rates. Well, that day has come sooner than we thought, and it's come down hard. So there is opportunities to save money. So if you go on my social, Alex's social, we have posted several videos about this, how we can save money. I'm sorry this is turning into a soliciting show, but look into it. Your bank is not going to do it. But if you are now this is fixed. If you are in a fixed rate mortgage, I'd say probably 5.75 and higher. As long as there's about a 1%. Yeah, we're going to see, even though you'd have to pay a 3 month interest penalty, the savings will exceed that. So we have spreadsheets that we can look at. It's determined based on what your mortgage amount is, your interest rate, how many months are left in your term. And we'll take a look and be able to compare that for you. So
yeah, and the really cool
that's
thing
our plug.
we can even track. And there's a guy that all he specializes is in mortgage penalties. That's full he does. He helps brokers to make sure that they understand all the different penalties, because every bank has a different calculation, a different posted rate, and that's where like we can run scenarios and say, hey, you're safe right now. They could keep dropping rates and you actually wouldn't have to pay a penalty. Or, hey, if you don't do this, and if they even drop by 0.25%, your penalty could go from 5,000 to 25,000. And
Absolutely.
that's where a lot of these times, these mortgages I've been helping with, I actually haven't even been doing them. I've just been sending them back to their bank saying, hey, this is what you need to do. They're at a big green bank, so they can actually get a penalty replacement, and then it saves them a lot of money.
Absolutely. Absolutely. Okay. We need to move on. So this is the time of the year where we get sales numbers, for, cities and how they're doing. And, probably over the last couple of years, sales have been down. You've seen the posts on Twitter, X, other social media, that sales have been down year over year at the lowest point in the last 10 years, lowest point in the last 15 years.
Yeah.
Well, guess what? There's a city in Quebec, Montreal, is acting in the opposite direction. Their home sales surged 54% in December. So now the median price increased 7 to 14% year over year, depending on the property type.
Yeah.
So if we're going to break it down, there was a 13.5% gain for a plex. So a plex would be like a multiplex, like a duplex, triplex, or a fourplex. And it went up to 794,500. A single family home rose 8.4% to 580, and condos increased 7.2% to just under 420,000. So,
we can tell why the prices are lower, so people can afford them. But those are still, the numbers that I really like looking at is like, man, the difference between a condo and a house it's not that substantial.
Yeah.
If you compare that anywhere else, like you're talking at minimum $400,000 difference.
Oh yeah. Like if you look at, my natural question is, how are they bucking the trend? Whereas the rest of the country, we're referring to Lower Mainland and the GTA, which, what's the percentage? Is it 75% of the population in Canada is
in Ontario?
These two areas?
Yeah,
Ontario and Lower Mainland.
Yeah.
How are they bucking the trend? Yeah, so there's a huge gap. So I'm just speaking from the Lower Mainland. If we had a condo that was 400,000, a townhouse would probably be 550, around there, 550, 600, and a detached house would be 800 or 900.
Yeah.
Like, wow, there's a small gap for condos to single family homes. Now, I'm pretty sure the 580 single family home in Montreal, it's probably a starter home, like a 2-bedroom bungalow, 1,200 square feet, which is essentially the size of a townhouse in the GTA and Lower Mainland.
Exactly.
Right?
That's, they have the smaller areas, the suburbs and stuff. Like even when I go to Winnipeg, like you see those really small box homes and stuff. But at the same time, owning a house for 580,000, that's pretty nice for a first time home buyer.
That's amazing. But at the same time, not to poo-poo Quebec, but they're almost a different country. So I don't know what kind of rules and laws are involved in there. And you need to speak French, or you can live in the English side or the French side and all that stuff. So
exactly, and that's where they'll be able to keep the prices down, because not everyone will be able to move there.
Absolutely. And you have to cheer on the Montreal Canadiens if you move there, because we think hockey is mad in Toronto and like the rest of Canada. Montreal is crazy.
Yeah, it would be hard to know. I don't know if it'd be worse to be a Montreal Canadian player with their fans or a Toronto Maple Leafs. I don't know what one would be the more stressful, actually.
I think both are pretty bad.
Yeah,
we've heard a lot of vitriol being a Canucks fan, and I'm sure being a Leafs fan, you hear it all the time with, the main media outlets is like, oh, Austin Matthews went to the grocery store, and all that. It's become quite the TMZ.
Oh, exactly. It's so crazy to think probably even 6 years ago, that wasn't really the norm for sports. And actors and stuff are so used to it. It's not a life that I want to live. I'm happy to show myself here on a podcast, but I don't want to be a superstar.
Yeah, this is what Tupac says. All I want is money. Fuck the fame. I'm a simple man, right? Yeah. So you can censor that out.
Yeah.
So okay, Montreal has kind of bucked the trend, but what about the rest of the country, especially in Vancouver? What's happened?
Yeah, I mean Vancouver prices, which is really not it's not a surprise to me, were they're unchanged for the last 3 months. The benchmark price actually fell 0.1% in December. Now, hey, prices came up a tiny bit compared to last year at 0.5%. And that just kind of makes sense. Now that's in the Vancouver area. I would say in other areas, like I know in Victoria, home prices are up higher than that. My area, home prices are up higher than that. And then the big one, it's just the sales. Sales are down 14.9%, which we know is below a 10-year average. And that's what's really obviously there's just not enough people that can go and buy. And there's also not enough inventory other than pre-construction condos. If you want a
Yeah.
pre-construction condo, you're good to go.
Yeah, there's a lot of like differences in supply. Like if you're as a buyer, if you're looking for a condo, it's a buyer's market. You
Yeah.
have your pick, you have your choice, and prices have come down. So as a first-time buyer, this is a good time to buy. Rates have come down. Like I'm sure there's a lot of you that are thinking, "Oh, we'll wait till it's all the way down." Well, guess what? So is 99% of other
Oh,
people. And if all of you are waiting for the absolute bottom. Now, this is the same thing when you talk about investments in stocks. You cannot time the bottom. You can
yep.
only go when your life dictates that you need to buy.
Yep.
And if you're sick of living at home with mom and dad, they're meddling in your life, and you're 25 years old, you want to get out of the house, or like you are sick of renting, or you've been rent evicted or something like that, or you're living in a one bedroom and you and your spouse, and hey, you got pregnant, you need a space.
Yep.
Well, you need a space now. You can't be like, oh, I want to time and wait for 3 to 6 months. Well, guess what? Your life dictates that you need a bigger space now. So it doesn't matter what's going on in the market. You buy when the time is right for you to buy.
Exactly.
But like sales are down. I mean, we're still seeing single detached homes still moving
Yep.
because it's more of a rarity, right? Like
Yep.
I've been telling a lot of my colleagues, it's kind of a tale of like almost two or three different markets where if you have a pre-sale or you have a condo to sell, it's going to be a rough year
Yeah.
because there's a lot of supply. A lot of investors have looking to unload because they couldn't handle negative cash flow with the higher interest rates the last couple of years. Losing $1,000 a month, they can only handle it for so long, and that's why they can't do it anymore. Flooding the market.
Yep.
Whereas detached homes, there's a move towards density, where especially, of course, I'm talking about the Lower Mainland
Yep.
and GTA. Municipalities are looking to densify, and when you're densifying, you're not making more single detached homes,
No,
and
and that
because of
becomes
that,
a rarity. Yeah. The
the law
price
of
will keep
supply and
going up.
demand.
Yeah.
Exactly. The law of supply and means it's rare, and because it's rare, it will go up. Now, because of those market forces kind of pushing down with the whole political landscape and uncertainty and stuff, the growth will be muted. And like again, like we talked about in a previous pod, probably around a 2 to 5%,
Yeah.
slow growth,
Which I
nothing
mean,
too major.
which I think would be amazing. I think that would like be good for the market. It would be good for people. It would just allow some more consistency and not feel like we're just going through a yo-yo or a washing machine.
Yeah. It's like, especially GTA, Lower Mainland, we go through like, there is no normal year. It's like,
Yeah.
holy crap, it's crazy. And then, holy
It's the
crap, it
worst.
sucks. Like,
Yeah.
it's like high and low, like a roller
Yep.
coaster. There's no like, like the rest of the country kind of ho hum, easy as we go kind of thing.
Yep.
So,
Yeah.
yeah. So, I mean, this year probably will be more of a normal balanced condition. So, and you know what? Speaking of which, because there's a lot of supply in the condo market, asking rents have come down.
Yep.
So, the whole law of supply thing, we need more supply. Well, unfortunately, the builders haven't built enough, but because a lot of supply has flooded the market because of pre-sales closing and people
Short-term rentals and
unloading.
stuff. Yep.
Exactly, the restrictions on Airbnb and Verbo, more supply has flooded the market and rents have come down. So it's according to rentals.ca, rent has fell to a 17th month low in December, now down 3.2% year over year to 2109. That's the average rental price. Now, I guess a 2109 is probably a two bedroom, right?
Yeah, and
So,
it's hard. Like the average. I wonder what the median would be. The median would probably be a better number, but again, this is all across Canada. We have to remember you can find some places you can probably rent for $800, but there's also other places that are $5,000, $6,000, and so The biggest thing that I take away from this, same thing that there's a lot of a lot of real estate gurus. Hey, real estate only goes up. Rentals only go up. That is not a guarantee for anything. You have to always look at something in a worst case scenario. If your investment only works if prices go up or if your rental goes up or it's at exorbitant rates, like I bet you if we look at 2021, what was the average? Probably 24, 25.
Yeah, 25. And even like places in Burnaby, like these brand
Yeah.
new developments, a two bedrooms like $3,000 a month. I'm
Yeah.
like, holy, like my goodness.
And people were paying it for a little bit, but then they were like, well, for one, what the hell am I doing? I could actually own this for cheaper than that as well. We've gotten, for a while, we were really far away from mortgage to home rental where it was cheaper to rent. We're starting to come back to a normalcy that way, which is good for the market.
Yeah, that gap is narrowing down now. You were mentioning here about some Facebook groups and landlords. You want to mention that?
Yeah, this one I saw on a group, and it's like I'm in landlord groups. I'm even in a couple like just even tenants boards. Just I want to see what people are seeing. And this one, oh my God, this person was upset that Alberta is going to cut the tape to make building homes easier. And why don't they like that? Because that means it's going to add more supply, and it means that the rental prices are going to drop. And it was really cool to see. Every other landlord in that place was like, what the hell are you talking about? Like, did you not do your due diligence and figure out, like, do you have to get $3,000 a month for rental? You have to make sure that you have contingencies plans. And yeah, he wanted everyone screaming, saying that Alberta should not be building more homes. We should just have these rentals. And that's the issue. We have some people that want this only. And then of course we have other people that want this. We got to find a balance.
Yeah, I mean, I can see where that landlord is coming from, but unfortunately, the overwhelming sentiment is for the good of society is to have more supply. So I have to give props to Alberta for having lower development costs, like unlike GTA and Lower Mainland. When we mentioned it before, I mean, some sort of government sort of permits, taxation, all that stuff, it accounts for 30% of building in Vancouver and Toronto. So for $1 million place, 300,000 of it goes to some sort of government taxation. Isn't that crazy? Like they're part of the problem why housing is so unaffordable. And I think I mentioned it's probably about a month or two ago now when Vaughan, Ontario was saying we want to promote development. We're going to lower development costs. So they're taking the Costco, Walmart approach. How do we get more action happening? Let's just lower the barrier to entry and have more volume. Like
exactly.
We need the rest of the country to follow suit to do that, as along with Alberta. So
let's talk about let's talk about the Toronto's budget here about 2025 bringing in a 6.9% property tax hike. Hey, I am all for people getting more money when it's going to go to the right infrastructure. I actually saw a video on the mayor there talking about this, and they really had no plans on where these funds were going to go. She's like, oh, well, like 2% is going to go to the police force because people are retiring. It's like, well, how does that work? If people are retiring, that means you can just add new people. Like, why do you need more money to go there? Their other one was, oh, we need more money for repairing the roads. It's like, your guys haven't been repairing roads at all. And the 1%, I think they kind of added it up to 4%. They're like, okay, so like you got 4%. You've done that. Where's the other 3% going? Like, where's these other funds? Oh, like we got some different things going on. It's like, no, like you need to tell us where these funds are going. Like, we actually need to hold people accountable.
Yeah. The unfortunate thing about like government is that they're not run like a business where you need to balance your books to show profitability. I mean, there's countless times where there is no accountability. They just spend and spend. And we hear all this scandal about some politicians expensing a personal vacation to like, I don't know, the Swiss Alps or Colorado for, 50,000 or 100,000 or something like that on the taxpayer dollar, on our money, our tax dollars. So this, like, especially with large part of government funds or like, property taxes, like, because we haven't had as much sales, governments have not gotten as much revenue with the property transfer tax, with building permits and all that stuff. So of course, city officials, provincial officials, they are kind of myopic. They're starved for tax dollars. And guess what? Even though our BC assessments may be like flat, gone down a little bit, they'll find a way to
Oh yeah.
increase the tax rate where it's not like your property tax is going to go down if your assessment goes down. They're
Nope.
going to find a way to increase your you know your property taxes anyway because municipalities are starved for tax dollars.
Yeah, that's the. I remember people saying, "Oh, my BC assessment it came down. My property tax is like now, like that's not going to happen. That's they will add other things in there, and again, it has to be the norm. Everything would have to come down. Like just because, let's say, if you have a house, Alex, that was worth 1 million, all the other houses stay there, but some reason yours went down. Well, that's bucking the trend. They wouldn't reduce your taxes because it's no different. They're looking at an average of it. And that's where other places increase in value, other places decrease. They got their formulas that they can play with.
Yeah, and then we just want to give a just a reminder to you folks when you get the BC assessment, it's just an estimate of what your
Yep,
property was worth in July of 2024.
exactly.
So don't think like all of a sudden like hey like I guess in this current market it's pretty close to what the market value is but not always the case,
Yep.
so don't think of it as that's your market. Like it's just an estimate. So if you're looking for like to get a real market value of your home, ask a realtor, or we can get an appraisal on your home
Yeah.
just to get an actual
And that's where I mean,
real value.
depends on your location. I know in like 2023, like out in the Abbotsford area, when the market really ran up there in the spring, places were going for like 1 million, 1.2. That's what they got their appraisal, their BC assessments back. Well, then the following year, the market value of those places were 800,000, but their BC assessment said 1.2. And that's where it is a very delayed thing, even on appraisals. It's a delayed thing for us to look at. It has to be from sales. All my appraisals are probably lower than what they would be on the market side, which for me,
Mm-hmm.
hey, again, I'm fine with that for taxes. I even, before I turn places into rentals, I make sure I get an appraisal to say, hey, this is what the value is. And I try and get it inflated a bit. So then the government can't say, hey, you owe me more money for taxes.
Absolutely, absolutely. Okay, what else is going on? Okay, so the unemployment rate for Canada actually edged down a little bit to
Yep.
6.7% in December.
That scared
So,
the markets for sure.
yeah, it created that kind of contributed to the whole bond market going up a little bit. There was
Yep.
a net of 91,000 of new jobs in December. So around 57,500 full-time, 33,500 part-time. And again, because bond yields have been gone up as a response of
Yep.
that. Now the chances of a rate cut on January 29th went down. So
Yep.
we'll see. There's some other things that's on the docket that we're waiting for as well, like
Yeah.
inflation and all that stuff.
Yeah, and that's where I mean it's the funny thing with the unemployment and jobs is same thing as like the expectations on what rates are going to be. This is an estimate. 7 times out of 10, they overestimate the jobs and they actually don't have as many as they think. A year and a half ago, I remember when it came out for December, they overshot it by 80,000. They said that there was 100,000 jobs, I think, and really it was 20,000. Like that's a massive difference.
Yeah. And I mean, the last little bit, most of the jobs were created were government
Government,
related. But
which we know we need to take
yeah,
away from.
exactly. And then the government did say that they're looking to slash or reduce their budget by 15.8 billion or something like that. So
Yeah.
I don't know how accurate this number is. And, like anecdotally, like I have a friend that works for CRA, or she did work for CRA. She was on the temporary, so she wasn't a permanent employee. And unfortunately, her contract
Not
wasn't
renewed.
renewed.
Yeah.
So, you know, it is a real human thing. It sucks that she didn't get her renewed, but we know from a grand perspective that we do need to reduce government bloat.
Yeah.
So I'm sorry for her, but on the grand scale I'm sure she'll land on her feet and she'll find something else. But on the grand scale, we do need to reduce government bloat.
Oh, exactly. That's what I mean. I would say like if they know where those like let's try and make a role for those people, try and set something up so that we know like, hey, we need to build more homes. Well, hey, depending on what that person did in the government, maybe they could come and do something that could actually help people as well. And that's where
Yeah.
It's so hard. And I mean, my hope for people, I'm very sorry to hear anyone that loses their job from it. I hope that they don't just sit on the sidelines and hope that they're going to get a job right away. I mean, when you are a government employee, it's, you kind of have like, hey, either you're a government employee or you go as a contractor. But with everything that's going on in the economy, like just go and take any job you can get. Like, don't sit there and be like, I'm going to wait a year till I get that perfect job. Go and do anything. Even after the first month, be like, hey, you know what? I'm trying to get a job. I can't find anything right now. Don't put yourself into a bad position.
Yeah, I mean, even during the heights of high interest rates, a lot of people were doing gig work like
Yep.
DoorDash, Uber Eats, all that stuff just to make ends meet because, all of a sudden inflation went rampant. Our mortgage payments went up
Yep.
for those of you guys on variable. Yeah,
But
groceries went up. And in order to make ends meet,
yep.
people need to work part-time jobs or have, side hustles. There
Yep.
is no shame in doing that.
Yeah.
Like,
That's, there's a
check your
story
pride at the
of,
door.
exactly.
You need to, you need to support your family. You got to do what you got to do to survive. So thankfully we are not in the dire straits of that period. I mean, we're coming off of it and a lot of people are still in that. They're in a better position, maybe not thriving. That's
Yeah.
okay. You got to do what you got to do to survive.
That's that, like pretty much the first week that COVID was when everything was getting shut down and everything. I remember sitting down with my wife and saying like, "Hey, like we're done spending money. We're gonna lock everything in." I applied for DoorDash because I was like, you know what, if I can't be doing other work, I'm gonna make sure that I'm still doing something. I never delivered. I never ended up delivering any food. I'd
Mm-hmm.
hoped that I could kind of do it like as I was in town. Where I live, there's just not enough. It doesn't work that way. But again, I'm not going to not do something to make sure my family's still thriving.
Absolutely. Absolutely. So, I mean, there's a few things before we wrap up here. There was a report here by NMP. So,
Yep.
MNP is an
It's a
accounting
big
firm,
accounting
right?
firm. Yep.
Yeah, yeah. So they are a nationwide accounting firm. I mean, there's a lot of headlines here. They oftentimes they kind of recycle the
Oh,
headlines, so they're
God.
not new. They said that 50% of Canadians are $200 away from going broke.
Yeah.
So
I feel like I've been
they're
hearing this since 2022. Like it's the
yeah.
same thing being sung, and the news articles love it.
Yeah, I mean, they're all headlines. So they did say that 2 in 5 Canadians are worried. Someone in their household could lose their job, reaching an all time high. So that's at 41%. That's up 9 points.
Yep.
Half of Canadians remain concerned about their ability to repay their debts at 50%. So that's up 2 points. While two-thirds at 65% say they urgently need rates to go down despite interest rate cuts. Thankfully, rates have come down from the peak. They're down 1.75% on the variable side, probably around, would you say, about 1% on the fixed rate side since the peak. And again,
Maybe
half of
even, yeah,
Canadians are,
some of them even
yeah,
lower, like depending on, because like some people were at 6.5 and now they're at 4. So like, yeah,
yeah, a little more. Yeah,
depends on it. But it's come
yeah.
down, which is very good. And that's where, even if we look at our insolvencies on the mortgage side for delinquency rates, like I think there was a little bit of an uptick at the end of 2024, but like we are below the 10-15 year average. Now, there's for sure people out there, like I'm not going to say that 50% of people, like there's a lot of Canadians that are in a really bad case. Like people don't have food, they can't take their kids to get medications. Like there's a lot of bad stuff going on. And that's where I think we need to focus on, how do we get people more food? How do we get people the right medications and stuff? But just saying, hey, everyone's $200 away from going from broke, like, what does that help us?
Yeah. I'm like, does that supposed to make us feel better? Like,
Yeah.
so we'll see. Yeah. So we want to touch a little bit on the LA fires. You want to touch on that?
Yeah, I mean, this is coming out a little bit after. The really good thing is the fires are, I know, fully contained now. Obviously, I think they're at like 10,000 buildings got ruined because of this thing. Like it's one of the biggest natural disasters on the fire side in U.S. history. And we just want to, send our heartfelt out to everyone that has family, anyone that was there, anyone that had to deal with all that stuff. It's a scary time, and that is where there's bad news that could come from this is we could see insurance prices in Canada go up. The way that insurance is bought is a very, to me, maybe a Ponzi scheme. You could say, you buy insurance policy, I buy an insurance policy to cover my insurance policy. That person buys an insurance policy to cover those insurance policies. Someone's going to get stuck with the stick. But what the governor did instantly there is they actually made it so every insurance policy had to freeze their policies and they could not change anything until after 2026, which I think that is a really good thing to see, is like, hey, we're not going to let anyone try and get out of this.
Yeah, so just to touch on what Alex says, how does LA's fires affect our home insurance in Canada? What Alex is trying to say is that the insurance industry, the term is called reinsurance, where let's say a very popular insurance provider here is Johnston Meyer, for instance.
Yeah.
Now, it's not Johnston Meyer they have insurance to cover Johnston Meyer's policies. And then it's essentially to spread the risk so that you're not liable in case a natural disaster or a huge economic event happens. So that company doesn't go belly up. So they kind of like reinsure, just basically spreading the risk so that not everyone's liable.
But someone, don't you think though, Alex, like someone at the end of it, someone at that stick is getting the short end of it. Somewhere along the line, someone's getting hit bigger than the other person.
Pretty sure it's not going to be just that one person, but it'll be that one company. It'll probably be spread out amongst all the deck chairs.
Exactly. Yeah, exactly. That's where that's where, I mean, it's the risk appetite. Same thing as insurance and mortgages. There's people that have a higher risk tolerance than other ones. And that's where the ones that maybe had a higher risk tolerance, they may get hit a little bit harder and they're going to increase their prices because of that.
Yeah. I mean, the same thing could be said, several years back when Fort McMurray went up in flames, and we had the wildfires in BC with I believe it's Lytton. Jasper.
Lytton was the one that 100 Mile and stuff that fully lit up and everything. And that's when that happened in Fort Mac. My parents own a condo at a mountain. And at that time, they actually was having all across Canada, like people were having a hard time getting strata insurance. They actually had to shut the building down, and the insurance went from $80,000 a year to $250,000. It was like insane. And that was, they had to shut it down because they couldn't have people in it. And that was a crazy time.
Yeah. So thankfully, hey, the wildfires happened in LA, but we had a lot of Canadian troops, those carrier planes that flew down,
water bombers,
scooped up water from scooped up ocean water to help douse the flames. So no matter what's happening in the political landscape with tariffs and all that stuff, like, you know what, this is just a human element, people helping people. It doesn't matter who you're, race, creed, country origin, we're just helping people. So I just want to give a shout out to all the Coast Guards, all the first responders. Thank you. Thank you for your help.
Yeah. Thanks all. And we just want to end like we're not a political show here, but we do want to make sure
we keep saying that, but we keep talking about political.
We do want to make sure that people know what's going on and give them the real information, because it's easy again just to get a news article saying $200 going away from broke. But obviously we're dealing with the liberal leadership right now, who is going to be in power. And the big ones are, we've seen that Mark Carney is definitely running for it. Christy Freeland is going to be running. Melanie Joy, she's not going to be running. Christy Clark, there's been talks that she was going to run, but is she going to be in question because of her conservative membership? The funniest one to me was Chandri Ari. He wants to run, but he doesn't even speak French, and he says French is not important. Which, hey, I'll give him an applaud for that. But I think it's in the prime minister, like probably like the act is like, you do have to be bilingual. Like that to me would be, even just for going to other like countries, you should at least be able to speak one different language.
Yeah, it's kind of like sometimes in the presidential election race, you hear these billionaire guys that want to run, but there's nowhere in hell that they're going to win. Like, hey, good on you, Chandra Ari, for wanting to run, but you ain't going to win, man. So I don't know if there's somewhere in our, it's the Constitution in Canada, or is it like Charter of Rights or something?
Charter or something. That's where I wonder if there is that, like, you have to speak it. I would. Let's put it on the docket for next podcast, Alex. We're gonna look it up. I'm gonna put money on it that it's in there. That's how I feel.
Yeah. So like in the States, you can't run for president unless you were born in the country. So that's why Arnold Schwarzenegger couldn't run for president, because he's he's born Austrian, but he was the governor of California. Yeah. I wish, because I was born in Canada, so I wish there was something in the Canadian Constitution or whatever the charter is that
Yeah.
you need to have been born in Canada to be able to run for prime minister. Now, in order to run for prime minister, it's more like in order to be a party leader, you need to have been born in Canada. So I don't know. Is that being ethnocentric?
Yeah.
I mean,
I don't know. I mean,
I'm of
Mike
Asian
Carney's,
descent, but I was born here. So
Mark Carney's a weird one because he has a Canadian and a UK passport. He was the governor in the UK and stuff, but he's also been here in Canada. So I mean, he's just jumping back and forth.
yeah, and at the same time, Mark Carney never got elected to office.
Yeah.
Yes, he was the Bank of Canada for a period, then went over to Bank of England. His resume is quite long, so he's a very accomplished individual. I'm not going to take anything away from it, but is he a politician? No.
Yeah.
Now, is that what Canada needs? We don't know.
I don't know right now, honestly. That's where like
yeah,
I'd like him be the liberal leader out of any of those names for sure.
Yeah, and like maybe I'm just calling it as it is. They're just running to be official party leader. If like the official opposition when the time comes, they're just going to be the lame duck prime minister until the election is called. And if Jagmeet Singh is actually going to be like a no confidence vote, he keeps saying it, but like what's the saying when you the boy who cries wolf all the time, you're never going to believe you, right? Exactly. Until you actually do it, it's like your words are meaningless. Yeah. So I don't know. Maybe it's my soapbox thing is like, if you're going to say something, do what you like, do what you say and say what you do. Yeah. Like then you have credibility. Yeah. So otherwise,
I mean, that's the problem I have with every politician is they say as much as they want. And there's no repercussions of anything that they say that they're going to do to help them run for prime minister, run for a party. There should be some certain things that like, hey, if you don't hit these milestones that you set out, like there should be some repercussions.
Mm-hmm. Absolutely. Well, I mean, the repercussions is basically the court of public opinion, and you get blasted on X or social media and all that stuff. And thank goodness we have the media to call out people on their BS. To be honest, so I think this wraps it up for this episode. I do want to thank all the listeners and viewers out there for supporting us. Even in our own personal lives, Alex and I, we get people, friends, family, even mentioning, "Hey, we listen to your pod. We love your stuff." We just want, from the bottom of our hearts, we just want to thank you for supporting us. This kind of gives us the fuel and the fire to keep going because we're enjoying it. And the fact that you guys are enjoying listening to it, we just want to keep this thing going. So it just allows us to give you good content, talk about what's going on in the market. And we don't have the answers, but we can debate about it and discuss and what's going on in our own lives.
Exactly. That's where it's, every time I get a message from someone, that's what warms the heart of like, hey, like knowing that we're getting to help people and we're just here just to give information and share everything with people and not hide behind anything.
Absolutely. So if you do like our pod, please follow, like, and subscribe and share it with your friends and family because we do want to grow our audience and our following so that more people can hear about us or hear about what's going on in the market and cutting through the BS. So what's the real goods on what's going on with housing, real estate, politics, I guess, and in our lives. So on behalf of my co-host, Alex Shanks, I'm Alex Pang. Thanks for tuning in. We'll see you next time.
Talk to you later. Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.